Now, as we in Nevada County face another intense fire season, residents are grappling with more than just the threat of flames. Skyrocketing insurance premiums, shrinking coverage options, and entire neighborhoods are being deemed uninsurable and have added a layer of anxiety to life in our beautiful community. With the wildfires growing more frequent and ferocious, the very safety nets designed to help people rebuild are beginning to buckle, raising urgent questions about the future of fire insurance. Now, for insurance agents, fire season is no longer just a means preparing clients for potential evacuations. It means navigating a shrinking market, juggling frustrated homeowners, and trying to find policies where few still exist. As wildfires intensify and insurers retreat from high-risk areas, agents are on the front lines of a crisis that's reshaping the way we protect our homes. What was routine policy work has become a daily scramble to secure coverage, manage fear, and explain to longtime clients why their insurance is suddenly vanishing. Now, here in the studio to discuss this is Chip Arenchild. He's the Vice President of Commercial Insurance with Interwest Insurance Services. So, Chip, thank you for coming in. Appreciate, glad to have you here.
Nice to be here.
As we talked about before we started, this is something that strikes me a little personally because I lost my fire insurance over the winter. My carrier, well, I'll name a name, State Farm, said, you're no longer covered, and we had to scramble and get new fire insurance for our home. We're not the only ones in Nevada County. All over they've done that. So I don't know what you're facing. Give me a brief overview of what you're doing.
Well, Keith, I would say what you described just when you're reading the introduction is exactly what we're facing every day. There is limited markets for our area. And Grass Valley, Nevada City, our region, is basically, it's on everyone's watch list. And it doesn't matter if it's personal insurance, which is, we're talking about homeowners, is exactly the same for business owners and commercial insurance. Our zip code and our characteristics have just made it untenable for people to provide insurance right now. There's a serious capacity issue in the marketplace, and carriers have totally pulled back for a variety of reasons, but primarily due to the fact that they cannot buy affordable reinsurance to make it profitable to even offer a quote based upon how rates are filed in the state. So it's a multi-pronged problem, but on a daily basis, what we're seeing is carriers that had stayed, like you mentioned, State Farm. Mm-hmm. I would say you were fortunate to have them as long as you did. I know Mike Bratton here in town and the other State Farm agents, they're really up against it. They've been a primary writer throughout the state. All of it is out of their control, and they're just being dictated to what they have to do, and they're just having to deliver these non-renewal notices. And then we don't have any options to place people, and so by default, most people are ending up in the FAIR plan, and that's a whole nother story, and I know we'll get into it. So it's a lot of work. There's no easy answers. It takes a lot of time to place insurance right now, and it's a headache for everybody involved.
Well, it's interesting you mentioned Mr. Bratton, who has been a longtime State Farm agent here in the area. I don't know how many years. I've been up here over 20 years, and he was well established by the time I got here. He lost his insurance, I understand, also.
Listen, same for me. I remember 5 years ago, was Nationwide. We were one of Nationwide's largest brokers in the nation, and they came up and said, hey, we're going to pull your fire insurance. And then subsequently, everyone in our firm has lost their Nationwide fire insurance. So
I know. We could go on and tell personal stories.
We could. And what happens is you got to go all the way back to those Sonoma fires, right? And the wind-driven fire event really opened the eyes to what's possible. And then if we go back to that event, and then we had the Redding fire afterwards, at the same time we had some fires down in Southern California, and then we had the Paradise fire. And what that did is it just all of a sudden heightened this awareness that, holy Toledo, we have concentration in these areas, and we never really contemplated these wind-driven fire events. And now we just saw it with the Palisades fire right in the middle of the winter, a wind-driven fire event that really you can't do anything about.
We're talking about fire safety and insurance and whatnot here in Nevada County, which is a common topic among neighbors when you speak to them. And so anyway, one of the things I was going to ask you about, and I mentioned to it, we're talking about redlining. For example, I understand that they will redline, insurance agencies or companies will take a zip code and basically say, everybody in a zip code, we're not writing policies. Is that what that is?
Yeah, whether that's redlining or not may not be the right term, but that's exactly what happens. And what happens is carriers take a look at their concentration in an area. What's the value? How much insurable value do we have in an area? And then they change the risk meter maps or the fire maps after the Sonoma fires, Santa Rosa fires. And what happened then is they said basically anything within 8 linear miles of a designated brush zone is now a wildfire hazard to reflect the wind-driven fire events. And consequently, so many areas across the state of California are now considered wildfire zones. And then they get a score, and there's 2 rating agencies for the whole country, and you get a score from 0 to 100 or 1 to 10. And we have a lot of 80, 90, 100 scores in Nevada County. And so what happens is these carriers look at our zip codes. They know where, if you say, you don't even have to say our zip code. If you just say Grass Valley, underwriters know Grass Valley, and they can tell you right away, no, we're not doing Grass Valley. Wow. So I think the decision not on concentration or where they think there's a chance for a large loss is made at some corporate headquarters, whether it's in Chicago, New York, wherever the carrier may be. And they are just looking at concentration and potential for danger, and they're limited on where they can deploy their capital. And so they're just all wanting to write stuff that they feel safer about. We've had company presidents tell us, hey, I just can't write another $800 million check. And that's what happened to Nationwide. It's what's going to happen to State Farm now with Palisades and another fire. So, and now we mentioned that you said we need to talk about the FAIR plan. Yeah.
Tell me about the FAIR plan. Or as some people call it, the unfair
Well,
plan.
and all that criticism is 100% justified. And I would say, if you're used to being a business owner and doing business, and then you look at how the FAIR plan operates, it was never intended to be what it became. And, we're brokers. Most people in Nevada County, we're independent agents. We represent the clients. We don't represent the carriers. We're trying to find the best coverage for the clients with the carrier that will do it. Unfortunately, the FAIR plan was originally set up to just be the place of last resort for hard-to-place pieces of property. The FAIR plan was funded by all of the property insurers in California that write business, and they fund at a rate relative to their market share. That goes along tickety-boom for forever. Prior to the Santa Rosa fires, we had 14 FAIR plan policies in our office. We have over 4,000 now.
Well, let me ask you this, though. And let's say, God forbid, you got the FAIR plan and you lose your home. What are your chances of being recompensated? What's the word I'm looking for? Getting enough money to build your house
made
back.
Whole?
Made whole. Thank you.
They will tell you that their funding mechanism is solid because it is assessments on the carriers, which is one reason why we're going to see rate increases, because the carriers that are going to pay for the Pacific Palisade fires are the carriers based upon their pro rata share of what market they wrote. So State Farm, in addition to the houses they lost there, is also going to get an assessment relative to the amount of insurance they wrote in the state, which is one reason why State Farm pulled out. They wrote something like 35% of the market, and then all of a sudden they went, we're not only risking what we've insured, but we also have to pick up everybody else in the FAIR plan 35% of a loss. And so I think the chances are good. There's funding mechanisms that they can continue to assess the carriers. It's all relative, though. It's the funniest thing. We just know they went through all the cash that they had, but we're just down. All we're doing is putting more stuff into the FAIR plan, both personal lines and commercial lines. And they just increased the limit for commercial businesses up to 20 million per address. So they are increasing their capacity to take more business. And I think they're doing it as a way to try and get through this period of time before they can get something working with the carriers to open up the marketplace. But they're just adding fuel to the fire.
Well, and let me ask you this. The FAIR plan, that's a state of California program.
Yes.
We've got a state that's in a $12 million budget hole right now. How does that affect it?
I think the assessment side.
The state's not like the federal government. We can't print money.
No, but the assessments are designed to recoup losses from the carriers that are writing business in the state, which is one reason why they're pulling back, because they're picking up exposures by the virtue of the FAIR Plan growing. And I think most consumers need to understand that. The funding mechanism for the FAIR Plan is the existing carriers in the state at the pro rata share of the volume they have in the state. So they can go back to the legislator if they need to pass money. Things could be done if we had another catastrophic loss. The Palisades is going to be significant because of the home values. We'd have significant home values here if we had a loss as well. But it's been the Southern California fires with the $1 million homes that's really going to showcase.
It's kind of skewed the whole process.
Without a doubt. And we don't know what's going to happen. They're only now settling claims. It's only started. We haven't begun to see the fallout, unfortunately, from the the Palisades fire yet.
Okay. Well, let's talk about the state. We have an insurance commissioner in this state. There's all these stories about how he's going to these expensive trips being paid for by the insurance companies, and yet he's the one that approves their. Is there a problem there with the insurance commissioner's office also?
Well, I think fundamentally the problem is that it's an elected position, which has been historically a stepping ground to another position, as opposed to requiring to maybe be an appointed position with someone with industry knowledge. And I'm not sure about the trips and all that stuff. I think a lot of it has to go all the way back to Prop 103. There's a consumer advocacy component to that proposition, which is paid for by the carriers to be a watchdog on the insurance commissioner and to make sure rates stay affordable. And that is who's opposing all these rate increases right now. The carriers are fundamentally saying, listen, we want to be in California. We're the fourth, fifth, sixth largest economy in the world. It's a profitable state to be in when they can get the rates that they want to get. But the way that rate filings were mandated to be done, the problem with the insurance commissioner was rate filings were never done timely. They took years and years and years to get rate filings done. And it didn't allow them to start to forecast future losses based upon recent events. It had to all be based on historical. So the carriers are back saying, listen, you got to let us change how we file our rates so they can reflect what potentially could happen with the wind-driven fire events. And they're also saying you need to let us put something in there that allows us to give credits for fire hardening and home hardening and things where people have done stuff to individually make their risk better than maybe their neighbor next door. But they need the rate. And this consumer advocacy group is against any rate increases, and that's the rub right now. And so I think the commissioner's stuck between trying to find a way to make the market open and viable versus satisfying that consumer advocacy group. Listen, this should have been done. And if people would pay attention, nothing moved on this thing from the governor's desk until there was a lot of pushback from the realtors and the banks because of the insurance crisis, and it was killing deals. Banks couldn't force place coverage. And then all of a sudden, the governor says, hey, we need to do something. And then the insurance commissioner said, we want to do something. They have sat on this for 5 years. The problems that we're talking about have been out for 5 years. It's really, everybody needs to take a look at, there's a lot of people that have contributed to this problem.
Well, it goes, as you said, the insurance commissioner, the governor, the legislature.
Yeah, it's all the way across the board.
The legislature has not acted to try to alleviate this crisis.
Yeah, I think everyone hoped that the problem would go away. And instead, it's just gotten worse. And now we're living with the worst case scenario that everyone wanted to avoid. And, we live in a community that's one of the top 5 in the state for a disaster. And I think that has more to do with loss of life and our limited egress and things because of how we're situated as opposed to values. But it's considered a dangerous community.
It seems like it's kind of the same thing that's occurring with PG&E and the California Public Utilities Commission with constant rate increases.
Yeah, every day in the paper.
Yeah.
Here's a quarter penny.
6 in the last year or something like that.
Yeah.
But I mean, it seems like that, again, that question comes back to legislature. And now, is there an insurance commission like the Public Utilities Commission?
There is not. There's just the insurance commissioner.
Yeah.
And we understand they're taking steps to, State Farm is leading the charge. They've asked for a rate increase and people have gone crazy. And I understand it. If you're living in an area where you're not in a fire hazard, you might be upset that you have to pay a little bit more. But really, the only way we're going to get out of this crisis is everybody's rates are going to rise up to find something tenable. We'll always pay more in these fire-prone areas, but we need to get a market where there's some competition and you can be rewarded for doing the things that will keep your house somewhat fire safe.
Well, what's the outlook? Are insurance companies coming back?
They're not coming back yet. I think we're kind of at a passe. That's what we
Okay.
understand. And if they can get the rate, if they're allowed to put the modeling in place that they've suggested to allow them to file their rates based upon future losses, if they can get some hardening credits, and everyone wants the hardening credits, and they can get the rate increases turned around in a timely fashion. The problem with it taking 3, 4, 5 years to get a rate increase is the market's changing. And the carriers don't have time if they can't file their rates. If they're in California, you have to file your rates, and then you can only deviate off of those rates based upon your filings. You just can't willy-nilly pull a premium up. And so if they cannot charge enough money, they're not going to write the business. The other piece that's going to go through is currently in California, reinsurance cost. And reinsurance is the carriers buy insurance on top of the insurance they provide, and there's a mechanism for that, are not allowed to be passed on to the consumer in California. And they have appealed to allow them to do that. And that probably makes sense as well, because the reinsurance market totally drives the insurance market.
It almost seems like we're, as a state, we're in a bit of a dichotomy, whereas one of the complaints you hear about PG&E and the Public Utilities Commission is it's a bunch of unelected people that are making that decision. And now, which people don't like those decisions, the constant raises. Now we have an elected official who's making those decisions, and people don't like that.
No.
So you're kind of, like, which system is system's the one to help us out here?
I don't know the answer, or if there's the will to try and change it, right? But I think if you even go back to when the insurance commissioner was first elected, he came here to Nevada County supposedly to talk about fire insurance, and I think the union wrote a pretty scathing article the day after about, we didn't do anything, and that's been the case throughout, right? It's a stepping stone.
The current commissioner.
Yes.
Okay.
Commissioner Laura. Listen, it's a no-win right now, and the people that are losing are all the homeowners, right? And it's visceral. It's everyone can kind of understand it till it happens to them, and now that it's happened to everybody, they're really, and they have a good reason to be upset. If you're on a fixed income and your premium went from $4,000 to $13,000, that's a pretty untenable situation. And that's what's happening across the platform when you go to the FAIR Plan. And the FAIR Plan is even saying they need more rate increases than they're taking right now. So
it's kind of almost like years ago, Prop 13, where they did
right.
that because taxes were going up and people were fixed incomes were losing their home because
right.
of taxes. So the people passed Prop 13, which a different thing, of course, but we're kind of in that same situation now. People that are on fixed incomes are possibly losing their homes because they can't afford their fire insurance.
Or they're going without it, and they're taking a big risk. And I think a lot of times consumers, we get caught up in fire and wildfire. But fire insurance is for you're leaving your toaster in your place, your gas burner being left on, right? And so all these other policies that you buy to be a companion policy to the FAIR Plan, they don't cover any fire. So the FAIR Plan, it's not just wildfire, it's any fire in your house. So it's really not, it's not designed, it's what we have. Until we work through it, it's going to be a mess. And you talked about how long. If the rates, if we can get through this year and they can get something worked out with the commissioner to get the rates filed, and then there's going to be a huge amount of companies filing their rates. Once those rates are filed and approved, I think we'll see a competitive market come back in. Our best case would be that when we get to 27, we kind of start to have an open market. I bet nothing gets done until the end of this year with the commissioner. Then you got next year to try and file rates. So we're probably 1.5 years, 2 years away from seeing a competitive market.
Well, next year it's an election year too.
Yeah.
So you may get a new commissioner.
We probably will. And maybe with a different appetite. And who knows? All of that being said, there's a lot of posturing going on, but it's not going to make a difference till they attack these fundamental core issues, and no one's really willing to get after that right now.
Let's well, we've tried to identify the overall situation that we have. You mentioned hardening credits. What kind of, is that if you take out trees, you get a little bit off? If you
Yeah.
put on gutter guards, you get a
It'll be
little
all
off.
the above. So part of what the commissioner wants back from the carriers is to say, in your filings, we want you to be able to give credits for those types of things that will reduce fire risk. And that is exactly the hardening that we're talking about, that the county's doing a good job trying to get out and tell everybody to do, that homeowners need to be doing around their house. It's the clearing around your house. It's taking flammable things away, wood structures, using hardy plank instead of wood, all of those things.
Well, let me ask you this. When these credits, would this be, well, you'll get 1% off because you got gutter guards. You'll get another 2% because you have enclosed eaves.
It'll be something along those lines,
yeah.
but probably not that specific. They may have a generic 10% plus or minus credit that they can apply to a premium if a piece of property has the proper hardening that carrier deems is efficient in reducing wildfire. Again, there's fire from a spark coming over on your house, and then these wind-drawn events, it may or may not make a difference.
Okay.
Right? So that's part of the problem as well. And they're changing the modeling. You're seeing the reinsurance carriers are developing new models to talk about taking into account with AI wind direction flow. So historically, they know what months of the year winds flow. And could that make a difference on whether they want to underwrite something or not?
Is it possible that rates would be cheaper during certain times of the year?
No, I don't think so, because
kind of like PG&E, certain periods of time during the day, it's higher rates.
I don't think so. It'll be annual policies, but I think the incentive will be there. We'll see it in building codes. Also, things that'll come into play will be communities where they're doing fire breaks. Will that be something that could help stop a wind-driven event? There's a lot of fire breaks being discussed in Nevada County right now. They're all important in maintaining those. It's not just insurance. It's a combination of everything that has to be done to minimize these wind-driven events. And so it's a combination of insurance that's somewhat affordable, community fire breaks, people being prepared, keeping your area clean, and new buildings or engineering structures going forward. It's not one thing will fix this problem.
Okay. Well, we're out of time.
Okay.
And so I think we could probably keep talking about this topic for a long time and get into more details, but unfortunately, we are limited as far as time. But it's been a pleasure having you here. Maybe we might be calling you again to say, come back and give us more information.
I'm glad to do it. It's such an important thing. So thank you, Keith.
You too. Thanks for coming.
Yeah,
I appreciate
glad to meet
it.
you.